Hello, everyone. Good evening to everyone for today's session. I would like to invite our chairman for Women's Excellence Committee, CA Preeti Savla. Request ma'am to start the session with a few words.
Hello, friends. Welcome all of you to this 7th series of Yashaswini and Idol, Inclusivity, Diversity, Outstanding Performance, and being the leader. And this is what our entire fraternity, CF female fraternity, is all about. And that is the theme of our webinar series of Women Members Excellence Committee of Institute of Chartered Accountants of India. Friends, I am very happy to share with all of you that in the last council meeting, the council has approved the International Conference for all CA women. So we will be having the global network, global net. I'm so sorry. Global networking and a lot of experiences of the learned faculties. So we are structuring. So we will have a network meet on 28th of uh, June, followed by international conference on 29th June. So I request all of you to please enroll for the same. We will be sharing and announcing this. We are already announced, but sharing the registration link, and we'll be having only 500 participants maximum. So it is on first come first serve basis, and also we'll be launching the women portal for part-time and flexi hours work on 28th, and having a good networking. The female who wants to have the job in after sabbatic or for part-time or flexi work hours or work from home, they will also get an opportunity. Again, the females who are at very good position at different companies, for them also it is very useful. So we will have a different types of sessions in different networking. So it is, our first time we are hosting this International Women Conference. So request everyone to enroll for the same. Again, in the first week of June, we are planning to come out with Independent Directors Program, and that also at Mumbai. This women conference, it's Sahara Star Mumbai, and this Independent Directors Program is at Mumbai Geo. So these programs are lined up in next month, and this webinar series on every Wednesday is going on. So today we have our very well learned faculties, CA Meenakshi Gupta, who will let us understand on the audit of real estate entities, which are having a lot of controversies and the issues, which method of accounting is being followed, straight line, or which method is followed for revenue recognition, and how to conduct the audit. A lot of challenges are there. So she will make the presentation in her simple and lucid language to understand and clarify all the doubts. And we have with us Sonal Jain, who will make us understand about the tally. The maximum users for SMEs are accounting software is Tally. So she will take us the journey through Tally software, because new now audit trail and how to use, activate those things in Tally software. All those things will be taken care by her. We have with us very learned and very dedicated moderators. I can see CA Ami as well as CA Chunoti, and both are always available for us for the benefit of our members, and contributing a lot, taking time out of their busy schedule. And so welcome my speakers and moderators and all participants who are gaining the knowledge, my dear wonderful, beautiful, and very knowledgeable participants. It is our endeavor to serve all of you the best through our various initiatives. At present, we are working for this woman portal, which is on flexi and part-time work, as well as we are also working on certain three publications, which one is into digitalization, one is into the independent directors and various opportunities. So these things at present is going on from the back end. Our office is also there to support in all our initiatives. With these words, I welcome all the participants, moderators, and faculties. So stay connected, stay in touch.
Thank you so much.
So I would like to introduce the speaker for the day. It's an opportunity for me to introduce a learned speaker, CA Meenakshi Gupta. She possesses 21 years of strong cross-functional knowledge, people management and interpersonal skills for operations excellence and business development. She is a qualified chartered accountant in November 1998 in the very first attempt. Currently, she's pursuing visa. Few of her strengths are extensive experience in auditing of big-sized organizations, including companies and partnership firms, excellent interpersonal and communication skills, result orientation, and focused approach. Presently, she is practicing as a partner in her own firm, Gupta Rustogi and Company, since Jan 2008. She has worked for 5 years in audit and assurance function, Deloitte Haskins and Sells, and handled few large listed corporates independently. She has an extensive study in Ind AS and applicability of the same in various companies during conversion stage. Few of her achievements are that she's a core member of WELL, Women Entrepreneurs Learn to Lead. She's a speaker in various seminars conducted at various forums, study circles, WELL, etc., on wide-ranging topics such as ICDS, demonetization, GST implementation, auditing standards, Ind AS, etc. She's a coordinator in various WIRC seminars, and she's been a member of Corporate and Allied Laws Committee of WIRC in 2019-20, contributed in few publications of the committee. In 2020-21, she's nominated a member of Women Empowerment Members Committee of WIRC. She's a reviewer of publication of WMEC Committee of ICAI, Contemporary Professional Opportunities for New Age Members. Lastly, she is also associated with a training academy, namely Gynation Academy LLP, with an objective to conduct seminars, training sessions on various technical matters concerning our profession. With this brief introduction, I, on behalf of the Women Members Excellence Committee, welcome you for the session. Thank you, ma'am.
Thank you so much, Ami, for this wonderful introduction. The introduction was a little long, it seems, though the achievements are countable. And I'm sure that, the opportunity given to me by the WMEC under the supervision and guidance of our very own Central Council member, Preeti Savla, will definitely guide all the members to a great extent. We are taking up that topic of audit of real estate entities. Now, audit is something which is, all the members are indulged into since their articleship days. So many articles nowadays take taxation as their core area of practice right from their articleship days. But I strongly recommend that, whenever you pursue CA course, a person should definitely take some part of your articleship period as for auditing purpose. It gives you a very good insight into the functioning of the companies, corporates, and like how they function. What is the practical aspects of functioning of a company? What are the areas which they need a lot of a deliberation into various functions like production is there, sales is there, marketing is there, because that is the core of the, even if you take up taxation, if you understand the nuances of the business of the corporates, it helps you a lot in understanding the business, the various functions, and how the basically the company is generating revenues, how it is recognizing revenues, how the production cost is recognized, even if it's a service company, how the costs are being allocated to various projects. All these things help you. Now, we are today taking a specialized area of audit, which is audit of real estate entities. For that, I would like to just share my screen to help you in understanding what I'm trying to put forward. So please allow me to share my screen. Can the technical team just guide me whether it is available, visible properly? Yes. Thank you so much. What is the audit of real estate entities? How it became so relevant? We all know that in the recent past, not so recent, but then in the past, the background of what this audit, I would like to just present a background why this audit of real estate entities area became a very important area. Because if you see, we all know that there is a insolvency and bankruptcy code, which is placed, which is, before the NCLT, that is National Company Law Tribunal. There are various companies which went insolvent due to irregularities of business, due to irregularities not pointed out by auditors in time. So, how these companies went into bankruptcy is a classic case. These classic cases will lead you to the importance of to understand how to go about the audit of real estate entities. Some examples of them are displayed on your screen. Then the real estate sector was also marred by there were various scams in last 10 years, which affect thousands of families across the country. We all know the real estate sector involves so much of labor, so much of materials are being used for the real estate industry. If any one single company goes bankrupt, you can understand the number of people getting affected, because it's a very cost driven, very labor driven industry. So lot of large number of people gets affected if anything happens to the health of the company. So this is also very important in that light. Then in this connection, we would also like to draw your attention to SA 250, which is consideration of laws and regulations in audit of financial statements, and SA 315, which is identifying and assessing the risk of material misstatement through understanding the entity and its environment. It is all prescribed by ICI. These two essays are of particular significance. Rather, I would say these two essays are of very significance for all sorts of audits. Though I'm mentioning it for real estate, but it is important for all sorts of audits. So one should definitely go into the details of these essays to conduct any audit in an effective manner. Then there is one more important aspect of that real estate entities is that in the auditor's report, the format of the auditor's report is such, or in the notes to the accounts, the companies have, whether they have confirmed to the mandatory provisions of RERA Act. RERA Act was formulated, we know, for specifically for real estate entities. That is one regulation. RERA is one authority which, kind of guides the real estate entities, or basically has set up regulations for real estate entities. So there is no such reference of provisions of RERA being complied with in the reference of audit report. So for that also, that is one more issue which I think will definitely be addressed in near future. And there was one urgent need to issue a direction to the statutory auditors conducting the audit of real estate companies under the Companies Act for a submission of a detailed RERA Act compliance certificate to the RERA of the state while conducting the annual audit of such companies to protect the interest of the home buyers and other stakeholders. So this is one more thing which needs attention. Now, for the real estate entities, our institute has done quite a lot of work. They have given us two guidance notes, and which I would just like to mention, which is very important, of very relevance for the audit of real estate transactions. So one is the guidance note, which was issued in the year 2012, which was named as Guidance Note on Accounting for Real Estate Entities, Real Estate Transactions. So that is one guidance note which looks into which I will be covering in large detail, because I think most of my audience would be auditors of companies which are not into the ambit of Ind AS, because Ind AS is generally followed by larger companies, and for them they have better training, guidance available within their firms. So my focus will be mainly on this guidance note, which is not for Ind AS companies, though we will definitely touch upon the guidance note which is issued for entities which were for whom Ind AS is applicable. Though I don't know how much importance that guidance note holds after the introduction of Ind AS 115, which is specifically for revenue from contract with customers. So now, after the introduction of Ind AS 115, this guidance note is not of that much relevance as it was earlier, prior to the introduction of this Ind AS. Because now mandatorily one has to follow Ind AS 115 for revenue recognition for Ind AS compliant companies. Now, we would just briefly understand what are the types of real estate. They are residential, commercial, industrial, and land. So land is something like vacant land, ranches, or working farms. Commercial, we all know, as malls, shopping centers, educational, medical buildings. So these all typical types of real estate have typical ways of recognizing revenue, of recognizing costs, and various other factors. So these are things which we should bifurcate. We should understand deeply what type of real estate, what type of accounting procedures, auditing procedures will be relevant. Then transactions which will be covered in guidance notes. Uh, Transactions which are already covered in the guidance notes, we have just listed down those types of transactions. So transactions are like, as you all can see on your screens, there are certain types of transactions in real estate industry. There is sale of plots of land, which can be either developed plot or undeveloped plot without any development. Plain land, plot of land can be sold. For that, the revenue recognition would be having some typicalities. Then sale of plots of land with development, where common facilities, like, because if we see nowadays people sell plots, but with some facilities, like Lodha is doing, like larger builders are doing, like in Lonavala, or places like hill stations, or large chunk of land is available, so they organize them into plots with some common facilities, like they give you internal roads, drainage lines, water pipelines. So there are some common amenities which are being given along with the plots of land. Then there is development and sale of residential and commercial units, row houses, independent houses, with or without an undivided share in land. So this is one area which is the largest chunk of the real estate part, where residential and commercial units are being developed. Then fourth thing is acquisition, utilization, and transfer of development rights, like commonly understood as TDRs. So for that also we will understand some aspects. And if we don't understand these aspects, it will be difficult to audit them. The redevelopment of existing buildings and structures. There are certain buildings, and because in Mumbai, the redevelopment is happening to a very large extent, where the old structure is demolished and in that place a new structure comes up. There is some exchange element, there is some sale element, there is some free, say plots of free units which are being given when a redevelopment takes place. All those things are covered in that. Then there are joint development agreements, because real estate is such a large industry, where sometimes it becomes very difficult for a single business owner to venture into any project. So they enter into joint development agreements. Joint development agreements are entered into between two parties sometimes, where one party is having the plot of land, another party is having the right to develop. Then there can be a third party which actually undertakes construction. So this has some typicalities, the JDAs which we call. Then what are the important definitions and terms which we need to understand for the audit of real estate entities? So very common definitions are defined. The larger definitions we are just picking up. There may be a huge number of terminologies which are being used in real estate, but the largely which is used as a project. Now, very commonly understood project is something like where we undertake a group of units or plots or saleable spaces which are linked with common set of amenities in such a manner that unless the common amenities are made available and functional, these units or plots or saleable spaces cannot be put to their intended effective use. We all understand that one particular building with just a standalone building can be also a project, but nowadays there are larger projects where many units are combined, many buildings are there with common amenities, so that is understood as a project. Or basically, any construction is called a project. Then what are we will see what are the types of project costs, what are the elements of project costs. So we all know that there are very largely there are three elements of project costs. One is the cost of land and cost of development rights. Then one is borrowing cost, then which is driven by accounting standard 16, then construction and development costs. So basically, land is there. Borrowing cost is a very important factor because most of the entities which undertake large real estate projects have borrowing cost elements. Most of them. It is very rare to find a project where borrowing cost is absolutely missing. It is normally it forms a very important part of any project. Because they need a lot of working capital, they need a lot of finance for such large projects being undertaken, because we all know real estate is a costly affair. To develop a real estate is not a very easy task, and doing it completely on your own money is almost, I would not say impossible, but it is really, really very difficult. So borrowing cost definitely becomes a very important part of a project cost. Then construction and development costs, obviously, without construction, what a project will be there. So that is another important aspect. Then in construction cost and third part, land and borrowing cost, we will not go into details because it does not have much elements. But construction cost has a lot of elements in that. That is why I've given an inclusive, description, because it can contain anything and everything. But largely, what is contained in what is part of construction cost is given over here is land conversion costs, betterment charges, municipal. There are various sanction fees. There are various permission costs. Then there are a lot of floor. The plan sanction fees is also there, which has to be given to the authorities like MHADA, or even so to say, if it is an SRA project, a slum rehabilitation project, then there is a lot of permission costs being involved. So all that is all part of the construction cost, because ultimately it has to be loaded to the project. Then site labor costs. Labor is a very important and intrinsic part of construction. Cost of materials, depreciation of plant and equipment used for the project. So there are a lot of large machineries which are used, like excavation machinery. Then there are some large lifts which are being installed. Then you all know without equipments how this industry would function. Then cost of moving plant equipment and material to and from project site, loading, unloading cost, which we say. Then cost of hiring plant. Many a times the builders are not so large builders that they have their own plant and machinery, so they hire plant and machinery for 2 to 3 years period of time. So that costing is also included in construction cost. And cost of design and technical assistance. We all know the designing is a very important and preliminary cost which is being incurred for taking up any project, because that forms the base of the project being undertaken. Then estimated cost of rectification and guarantee work, then including expected warranty costs and claims from third parties. Now, claims from third parties is also very important part of construction cost, because it involves a very important aspect of land. So we all know land is very sensitive part where other people can come and put their claims. Then there are some roadside roadside developments which take place on empty plot of land. So then they put up their claims. So these are all legal things which are there. This all forms parts of construction cost, because ultimately you have to load into your construction cost. Otherwise, how will you arrive at your actual profit? Then what are specifically not included. So we would say included and does not include. So it can be something little more than that, which can be there in included, and which can be something more which cannot be included. But whatever came to my mind and whatever is generally understood, which has been also given in a guidance note given by the institute, it does not include its general administration costs, because a builder might be having their multiple projects. So they would be having, you can say, a head office. So where the head office personnel sits, or the accounting staff, the various other important staff sits, which forms part of the general administration costs. Selling cost is not included, because selling cost is something which is included in your P&L. It is not a project related cost. Sometimes it can be a project related cost, but then that has to be seen on case to case basis. Then research and development cost, the depreciation of idle plant and equipment. Sometimes plant and equipments lie on the sites, but they are not used for the project. They are just kept aside. So we have to see whether they are idle, whether the depreciation should be loaded to the project or not. So this is a part of this is the judgment of a accountant as well as the auditor. Then cost of unconsumed or uninstalled material delivered at site. So there are sometimes what happens that a lot of materials are being ordered, but then actually the materials which are consumed can be different, because we can see after the construction is completed, a lot of unconsumed materials lie on the site. So that cost of material should not be loaded to the construction cost, because that will make your construction cost higher and profit will be affected due to that. Then payment made to subcontractors in advance of work performed. So this industry basically works mainly on advances, because the contractors start with the work. If they wait for the works to be completed, it will be like without any money throughout the project. And we all know that projects take long amount of time. It can be from 1 to 3 years, 2 to 3 years rather. 1 year is a very short period. It's not possible only. 2 to 3 years is general time which has been taken by any project to develop. So it works mainly on advance. So subcontractors, take advance, but that just mere payment of advance should not form part of construction cost. They should give periodical bills depending upon the works undertaken by them. So that is one thing which should not be included in construction cost. Next is cost that may be attributable to project activity in general and can be allocated to specific projects. So there are certain costs which are incurred in general, but that can be allocated to specified projects on a reasonable basis, which can be like insurance. Insurance can be taken up for all various projects. So it is possible that insurance is taken for various projects. So project wise, that insurance cost has to be allocated. Then cost of design and technical assistance, it is possible that there are common architects for various projects. So we need to allocate the cost of such architects or designers based on a reasonable basis. Then construction or development overheads. There are certain overheads which are incurred for company as a whole, which might be possible that we might be, for example, a project engineer. He's overseeing 5 projects. So we have to divide the project engineer's cost into five may not be equal, on a reasonable basis, depending upon the cost which has been incurred or depending upon the estimated cost of the projects. And on that basis, that construction overheads had to be allocated. Borrowing costs. Then there are it seems there are, we all know that companies, sometimes they take loans for a particular project, but many a times it happens that the loans or overdraft facilities are being taken by the company as a whole for various projects. So even that borrowing cost needs to be allocated on the basis of estimated cost which has been incurred for the various projects. For example, you are having 4 projects, so we need to see how much cost has been already incurred for those projects. So the cost of WIP would be available to you. So based on that cost of WIP, probably the borrowing cost, first of all, the entire borrowing has to be found. Then the borrowing cost has to be found. With that, we will come to know what is the general rate of interest which a company is paying. So we have to apply that general rate of interest to the expenses which have been incurred by in the various projects, and we have to assume if no specific cost you can identify, then you have to assume that whatever cost has been incurred, in that proportion, your borrowing cost has to be allocated to the various projects. So this is one thing which we need to keep in mind. With this, borrowing cost is not unduly loaded on one project, and other project is kept free of borrowing cost. So those kind of things we need to keep in mind while auditing. Then the most important part is revenue from construction projects. That is the one which causes a lot of confusions, or for the new auditors, the people who are already doing it for a long past, in the past, they are having that kind of knowledge. But I am just focusing on as if we are doing a new project and how we should go about it, to understand how the revenue from construction projects are recognized. So, what is a project revenue? Project revenue includes revenue on sale of plots, undivided share in land, sale of finished and semi-finished structures. Sometimes it happens that even in the project under construction is sold. Suppose a builder is not, it's not feasible for a builder to continue with the project, so he sells the project in the semi-finished state also. Many times it happens. So that valuation needs to be done, and project revenues have to be fixed. And consideration for construction, consideration for amenities and interiors, consideration for parking spaces, and sale of development rights. All these forms parts of project revenues. So project revenues are measured as the consideration received or receivable. Sometimes consideration are to be received as per agreement. So even those forms part of project revenue. Measurement of project revenues gets affected due to uncertainties that depend on the outcome of future events. Those estimates often need revision, or events occurred and uncertainties are resolved. So, the amount of project of revenue may increase or decrease from one period to the next. Obviously, like, because if see in the first year, it is possible that there is almost no revenue recognition because there is no major development which is taking place. It is only the plinth which has been taken on the sometimes what happens, a substantial time goes into the various approvals which are being required, various plans which are getting approved. So it may so happen that in one particular year there is no revenue recognition at all, because the milestones which are required for recognition of revenue have not been achieved at all. So that in that scenario, it will increase from one reporting period to the next, because in the next year it may so happen that there is a substantial development and the revenue had to be recognized based on the project completion or percentage completion, which we are going to cover up next. Then various stages of revenue recognition. This is something which we all face on a day-to-day basis in a real estate entity. Is what are the basic guidance which is available to us for revenue recognition. So for recognition of revenue in real estate, it is necessary all the conditions specified in paras 10 and 11 of accounting standard 9 are satisfied. We will cover in our subsequent slides that what are these para 10 and 11 of AS 9 which is there, because you have to go for revenue recognition for real estate entities. Though many people get confused that we have to follow AS7, that is construction contractors, but real estate entities are different from construction contracts, though the methodology to recognize revenue will be similar in both the cases. But we have to go mainly by revenue recognition part over here, because you may not be a contractor, though you may step into the shoes of the contractor. But in a real estate entity, builders are different than the real estate contractors. So we need to understand very clearly that we have to be guided by AS9 and not by AS7 for the purpose of real estate business. And the point of time at which we all know, this is the very definition which we have been learning from our early childhood, early CA childhood days, I would say. So the point of time at which all significant risks and rewards of ownership can be considered as transferred is determined on the basis of terms. One second. Yeah. The point of time at which all significant risks and rewards of ownership can be considered as transferred is required to be determined on the basis of terms and conditions of agreement for sale. So we have to see agreement for sale, that when such significant risks and rewards of ownership can be considered as transferred. Nowadays, it happens that whenever you book a flat, suppose you're going to book a flat, so you give a token amount of 5 lakhs rupees. Suppose the flat cost is a crore. So you will give 5 lakhs as token money. So that is not the time when you will recognize the revenue. The builder will not recognize the revenue at that point of time, because then subsequent risks and rewards of ownership are not considered as transferred. It is just a token amount, there is no agreement. So nowadays, as per RERA and even as per various other provisions of the RERA, it has become a mandatory thing that if at least 20% of the amount has been received by the builder, it is the builder is actually bound to enter into an agreement for sale. So that is one important aspect. So then you can say that the even the buyer is bound by that agreement now, and it will be mandatory on his part to honor the agreement. Then in case of real estate sales, the seller usually enters into an agreement sale with the buyer at the initial stages of construction, because under construction projects are such where the bookings happen when the even the plinth is not being dug. So an agreement might be entered then. At that point of time, recognition of revenue may not be possible. So this agreement for sale is considered to have the effect of transferring all significant risks and rewards of ownership to the buyer, provided the agreement is legally enforceable. Now, what do we call agreement is legally enforceable? That the stamp duty, registration costs have been paid, and it has been registered with the stamp duty authorities. Then it is possible that the buyer can enforce it in the legal framework. So that is one, and subject to satisfaction of conditions which signify transferring of significant risks and rewards, even though the legal title is not transferred or the possession of real estate is not given to the buyer. We all know that the entities have to, that legally cannot take a possession of an entity, a possession of a particular unit if the OC has not been obtained by the real estate developer. So, though the legal title is with you, it does not get transferred to you, or the possession does not get transferred to you. But we need not wait for the revenue recognition for that stage. But then we will go into the depth of this particular aspect. Then, once the seller has transferred all significant risks and rewards to the buyer, any acts on the real estate performed by the seller are in substance performed on behalf of the buyer in the manner similar to a contractor. Now, here where the patch up happens between AS9 and AS7. Like what that once that agreement is entered, then the seller or the developer becomes a contractor for you, because now the already you've become the owner of the unit by virtue of the legal right which is available to you by virtue of the registration of the contract. So he will step into the shoes of a contractor. So then the aspects of AS7 of revenue recognition comes into play in AS9. So this is some common parlance which happens between these two accounting standards. Now, applications of principles of AS9 in respect of sale of goods to a real estate project. So what are the principles of AS9 in respect of sale of goods of revenue recognition is when the completion of the transaction or activity, when the revenue recognition process in respect of real estate is completed. That happens in the case of sale of plots of land without any development. So this principle gets applied for in AS9. Then what is the completion of revenue recognition process? Completion of revenue recognition process is usually identified when the following conditions are satisfied. What are the conditions? One is obviously the significant risks and rewards of ownership is transferred to the buyer, and seller retains no effective control of the real estate, usually associated with the ownership part. So limited to that particular unit, he does not have any ownership now. Then the seller has effectively handed over possession of real estate unit to the buyer forming part of the transaction. So once you hand over the possession, there is no question of any right being retained by the seller. Then no significant uncertainty exists regarding the amount of consideration that will be derived from the real estate sales. Because once the agreement is entered, obviously the uncertainty which prevails over the sale value is completely wiped out. The consideration is fixed as per the agreement. It is not unreasonable to expect ultimate collection of revenue from buyers. So when does this happen? When a substantial chunk has already been collected by the seller. So when a substantial chunk, you may say 40 to 50% of the total consideration has already been paid by the buyer. So it is very difficult to estimate that the ultimate collection will not happen. So these are certain conditions which needs to be satisfied for the revenue recognition process as per AS9. Now, the method of recognizing revenues, we all know that percentage completion method is almost now mandatory for all the entities who are following, who are real estate developers. As per this, even as per AS9, even your guidance note tells you to go about that. Though we all know practically there are many entities who are still not following percentage completion method. So, because this is a guidance note, we know this is a guidance note, though the revenue recognition AS9 is mandatory, but builder as such specifically is not covered by that AS9. It is for a general revenue recognition. So whether the builder is still governed by this is not being governed by this particular guidance note, because ultimately we know the status of guidance note, though it is a publication of the institute, it is still a guidance note. It is not mandatory thing. So the builders are taking that advantage of that it is not mandatory and AS9 is not specifically applicable to a builder. So you are taking that pretext. They are still following completion method. But I would say the larger companies, good companies which are very good in following accounting standards or which follow proper corporate governance thing, they generally follow project percentage completion method because it gives you an evenness also. Because if a company follows percentage completion method, almost every year some revenue is getting recognized. Because suppose for a builder, he's undertaken only one project. So if he undertakes only one project, then what will happen that 2 years or 2.5 years, there is no revenue at all. And when the third year, when the project gets completed, then he will recognize revenue. So you can understand that on the third year, the entire revenue gets recognized. And the first 2 years, there is almost zero revenue. So which is not a very healthy sign, which is not a very healthy, because if you go and seek finance in any industry, though construction, though even the banks understand that the builders or even a work in progress is there or the estimated project revenue is there, they still get finance nowadays. Uh, but still, for a company to present its balance sheet every year, that evenness has to be there. So percentage completion method is always advisable. And actually, I feel it is a mandatory thing that the percentage completion method should be followed. But because of the absence of that mandate, still that thing is not being followed. So we know what are the indicators of such transactions or activities. The duration of such project is beyond 12 months. We all know real estate project has to be beyond 12 months unless you are constructing a very small quarter or something which gets constructed in 6 months or 9 months. Then and the project commencement date and project completion date falls into different accounting periods. So it has to be there that it will definitely fall into different accounting periods. Then most features of the project are common to construction costs, that is land development, structural engineering. These are all important aspects of construction, any real estate project. Then while individual units of projects are contracted to be delivered to different buyers, these are independent upon completion of a number of activities or provision of common amenities. So it is possible that there are projects with common amenities where they are not interdependent upon each other. It is possible that they are interdependent upon each other. It is also possible that it is completely different. For example, if a water plant is there and different buildings are there, but if the water plant is not ready, though even though it is a common amenity, can the builder hand over the possession of these buildings? No, because without water the buildings won't function. So that becomes a common amenity which is interdependent. Then there are certain independent amenities, for example clubhouse. Even if clubhouse is not there, the buildings can function. So because that is just a common amenity, this is a additional facility which has been given by the builder. Then the construction and development activities forms a significant proportion of the project activity. Then application of percentage completion method. Now, this method is applied when the outcome of a real estate project can be estimated reliably and certain conditions are satisfied. So it is not that key as soon as the project is undertaken, it will be revenue will be recognized. Not possible. There has to be some things, some mandatory milestones which needs to be completed to apply percentage completion method. So what can be those mandatory milestones? So that guidance note gives you a good guidance on what can be those milestones. So there are certain conditions which needs to be satisfied. That is, project revenues can be estimated reliably. Project cost to complete the project can be measured reliably. Because how is this possible that when important aspects of the project cost has already been incurred, like for example, plan sanctions, designers cost, architect cost, all these very larger costs are estimated. Labor material can always be estimated by the engineers. Then critical approvals for commencement are in place. So if you know the something, some approvals are such which are very critical for the commencement of place. For example, environmental clearance. I know that in Mumbai, there are many projects which are still stuck or which are rather been shelved because of the environmental clearance not being available. So even if they have dug up, they have done the land development or whatever allowable activities are there, those projects are just stuck up. They are just not moving ahead because of those critical approvals. So if those critical approvals are not in place, then there is no point in applying any percentage completion or total completion method that doesn't come into picture. Percentage completion methods completely out of question in such cases. So what the guidance note suggests that an entities can start recognizing revenue on a percentage of completion basis only when 25% of construction and development cost of project has been incurred. So it gives you a ballpark kind of thing that at least 25% of the project cost has been already incurred. And that definitely the can be a trigger for that. Okay, now the 25% will only be incurred if critical approvals have been obtained, the estimation of cost and revenue has been already made. So that is one landmark or benchmark you can say. 25% of the saleable project area is secured by contract. So for example, a project is being undertaken but not a single unit is being booked. So in that case, it is just unreasonable to even recognize revenue. So I would say that 25% is the benchmark which has been given by the guidance note, where at least 25% of agreements have been entered. So in that case, also revenue can be recognized. Then 10% of contract consideration as per the agreements of sale have been realized. So it is possible that there are certain units where, as I told you, that for 1 crore cost worth of unit, 10% is at least 10 lakhs. Suppose if a person is given 1 lakh as the token cost, you will not recognize revenue for that unit because 1 lakh will not constitute even 10% of the total consideration. So in such scenarios, percentage completion method should not be applied. Then the recognition of project revenue by reference to the stage of, we all know that how to recognize project revenue in project completion method. We all know that we need to know what is the stage of completion of the project activity for eligible contracts. So what happens that when the project is undertaken, there are architects being involved. So they give you a certificate. They give the builder a certificate that this project is, at the end of the year, the builder will obtain the certificate that at the end of the, like for example, 31st March 24 just went by. So as on 31st March 24, project A is completed 50%. Project B is completed 60%. Project 7 is completed 90%. So in such cases, those revenues will be recognized on that percentage basis. So when it is probable that total project cost will exceed total project revenues, the expected loss, which is a very possible scenario where sometimes cost overruns happen to such a great extent that the project gets stuck for suppose 3 years or more than 5 years, 4 years or 5 years, then it is possible that the cost overrun has happened and total project cost is exceeding the eligible projected revenues. Then that expected, we all know losses have to be recognized as an expense immediately. So there is no waiting period. The amount of such a loss is determined irrespective of commencement of project work or the stage of completion of project activity. So in whichever stage the project is there, once the project cost is exceeding project revenue, that particular loss has to be recognized immediately. There is no waiting period for that. The percentage of completion method is applied on a cumulative basis in each reporting period to the current estimates of project revenues and project costs. So what happens that on a particular by the end of a particular year, there is some percentage which has been implied that okay, 60% is complete. It is possible that there is some difference here and there. So what happens that is called a change in accounting estimate. It is not an error, because ultimately we are recognizing revenue on an estimated basis. So the effect of a change, excuse me, ultimately, the effect of a change in the estimate of project cost or the effect of change in estimate of outcome of a project is accounted for as a change in accounting estimate. So change in accounting estimate very much happens in such kind of projects. In rather any project it will happen. Then, so that was all about percentage completion method. Total completion method, there is nothing great to explain because we all know when the project will be completed, OC is obtained, all the costs will be recognized, all the revenue will be, whatever revenue has been earned, that will be recognized, and the recognition becomes simpler. Now, sale of lands or plots. So say this is also something which is very, very simple, because sale of plots of land without any development, it has to be recognized when all the conditions in paragraph 4.2 total completion are met. So what are those? We know that the risks and rewards of ownership, legally enforceable right is available. So then that will be recognized. Now, a sale of developed plots, when the development activity is significant and if the projects meet the criteria specified in AS9 and as per percentage completion method. So developed plots are similar to like, construction projects, because there that development activity comes into play. Then TDRs, transferable development rights. Now, what are the ways TDRs are being acquired? One is by direct purchase method, that you just pay for the particular cost of the TDR and you get the TDR. Second is you do some development activity and construction of a built-up area. The cost of acquisition should be added to the project cost. Means you have developed some part, some area. For example, you have developed a road. For that, you will get you will pay some amount. So that acquisition cost will be your project cost, will be added to your project cost. Then there are giving up of rights over existing structures or open land. Nowadays, you see in Mumbai that when a construction of a project takes place, many builders leave a lot of area for common use for the public. So that is like you have given up some part of your land. Very sorry. You have given up the rights over existing structures. So those development rights will be recorded either at fair market value or at the net book value of the portion of asset given up, whichever is less. So sometimes what happens is the authorities, municipal authorities give a fair market value of the land which you have given up. So for that, the fair market value will be applicable. Sometimes if the net book value of the portion of asset given up means you have the book value of the portion of asset which you have given up. So if whatever is less, that will be your cost of that development right. So for this purpose, fair market value may be determined by reference either to an asset or portion thereof given up or to the fair market value of rights acquired, whichever is more clearly evident. So these are TDR's costs. Now, when development rights are utilized in a real estate project by an enterprise, cost of acquisition should be added to the project cost. Very understandable thing that if you are utilizing the development rights, you have to load the cost to the cost of acquisition. The cost of acquisition has to be loaded to the project cost. And when development rights are sold or transferred, the revenue should be recognized when both the following conditions are fulfilled. Which are the more important conditions? Title to the development rights is transferred to the buyer, and it is not unreasonable to expect ultimate collection of realization of revenue. We all know that ultimate realization of revenue is the prime motive for which the builder is working. So definitely that has to be there if you have to recognize revenue. Where development rights acquired in exchange of an asset, unlike the existing guidance, it is not governed by the guidance on real estate, but rather it is governed by the principles of exchange of assets, which are enunciated under Ind AS 38 intangible assets, which requires fair value accounting based on certain criteria. I'm not going into very much details, but I've just given you a reference thing that you can go and refer this particular NDS, Accounting Standard 38 for the purpose of this putting up a value to the development rights if an exchange of asset is taking place. Then what are the important disclosures which we need to make as auditors? An entity which is a real estate entity needs to make these disclosures. That each of the following for projects in progress at the end of reporting period: aggregate amount of costs incurred and profits recognized to date, amount of advances received, amount of work in progress and value of inventories, and excess of revenue recognized over actual bills raised, that is unbilled revenue. So these are some important disclosures which are required to be made. Then now we come to briefly we will touch upon Ind AS 115, because now for companies which are following Ind AS, they will have to go by the principles of Ind AS 115. What is the core principle of 115 is that revenue should be recognized from transfer of goods or services to a customer in an amount that reflects the consideration that the entity expects to be entitled to in exchange for the goods or services. So it's a very plain vanilla definition. It is a definition which is understandable by a common person very easily. There is no, hanky-panky in this particular definition, and it's not very difficult to understand. It's something which is logical. So Ind AS 115, revenue from contracts with customers, we know there are 5 steps. One is identify the contracts with the customer, identify the separate performance obligations. What are the performance obligations? That, the building will be constructed, unit will be given, or what are the performance obligations? Suppose the construction of a flat. When the possession letter is being given by the builder, that is a performance obligation. Then determine the, for a builder, it will be different. For suppose for a builder, it will be like, 4 floors have been constructed, that is one performance obligation. Then 8 floors have been constructed, that is another performance obligation. So that can be different area, but revenue will be recognized on the performance obligation. Determine the transaction price. Transaction price is, we all know, that is the consideration price of a unit. Allocate the transaction price to the performance obligations. This is the percentage completion method kind of thing. So if the performance obligations to the extent of 60% has been done, then the transaction price will be recognized based on that performance obligation. So it is not that the revenue from contract with customers, if you are following, you can't follow percentage completion method. Subsequently, I will cover a little bit of the fact that percentage completion method is, because some people are having a confusion that in Ind AS 115, it only total completion method is to be followed. No, it is not that. You can still follow percentage completion method. Step 5 is recognize revenue when a performance obligation is satisfied. So once you identify the performance obligation and determine the transaction price, you will allocate the transaction price based on the performance obligation, and you will recognize revenue when performance obligation is satisfied. So these are 5 simple steps in Ind AS 115. Now, with the introduction of 115 Ind AS, the real estate entities will need to determine revenue recognition on the basis of whether performance obligations is satisfied over a period or at a point in time. So there are 2 aspects. One is performance obligation is satisfied over a time or at a point in time. So it can be over a period, or it can happen only on one particular event. Like for example, OC is obtained, that is at a point in time. Over time means depending upon the construction phases. So that is called over time. Then there may be change in the accounting system of real estate entities for recognizing revenues out of contract with customers. So actual impact of each company will depend on their specific customer contracts and how they will apply this standard and existing standard. The Institute has already clarified via a press release in 2018 that Ind AS 115 does allow recognition of revenue using percentage of completion method, and has explicit and specific requirements to recognize revenue when performance obligation is specified over a period of time. So now it is very clear that Ind AS 115 supports percentage completion method also. Then what is the conclusion? That it is making certain modifications to the accounting system for revenue recognition, still keeping the provision of percentage completion method as an option to real estate entities. Thus, recognition of revenue as construction progress is possible, considering the prevalent long-established legal system, facts, and circumstances of individual contract. Now, these are something which I have mentioned, which may not be, I'll just skip. Okay, the last thing is therefore, in view of relevant provisions of this standard and Act and Amendment Act, performance obligations of real estate entities do not create an asset for alternate use. An entity may have enforceable right to payment for performance completed because, see, in a real estate entity, there is no alternate use of that particular project. If a flat is being sold for residential use, it is not that it will be used for some other purpose. It has to be given for residential purpose. So there is no alternative use. So they may have to just need to pay most attention while documenting or drafting the customer documents so that it can recognize revenue at a point in time. So this is for the purpose, if you want to follow completion method, then your document should be drafted in such a manner. Then what are the major audit issues? Am I overrunning the time? Can I take 2 more minutes?
No problem.
Yeah. So what are the major issues which are being faced in audits? Cost allocation in case of entities which are executing multiple projects, phase-wise construction, common area cost allocation, clubhouse. What happens that there if a common clubhouse is there and you are having 5 to 7 buildings. Now, how will you allocate the cost of the clubhouse to that building? So this becomes a little intricate issue. So there you have to apply your judgment. You have to apply your common knowledge that based on the cost which is incurred for various projects, the clubhouse cost has to be equally divided, not equally, in proportion to the construction cost you have to allocate. So this becomes a little complicated, but then, audit is all about complication. Then compensations, SRA costs wherever applicable. SRA costs means what? Because there are slum rehabilitation projects, you have to give rent to the tenants, then you have to incur a lot of approval costs. So those are all cost allocation have to be done to the projects. Then revenue recognition is milestone and dependent on reports of other technical experts. So here, sometimes what happens that the auditors go into the back seat and they are solely dependent on the various experts like architects and engineers. So based on their reports, obviously you will apply a judgment that you will call for the pictures from the project side that, okay, building looks half complete. Okay, that's fine. You will see the pictures. But ultimately, you have to rely on the architects and engineers certificate that, okay, project is 60% complete. So, they have given a certificate. And on that basis, revenue recognition as per percentage completion method, you will check. The reasonable estimates pertaining to project costs. Now, there are sometimes what happens that some project estimated costs have to be made. For example, some amenities have to be put in a flat. For example, a builder has promised a filter to be put, a builder has promised an AC to be put. So those costs can be estimated because it is possible that those costs have not been incurred. They will be incurred in future, but we know what is the estimated cost of it. So we can always estimate that total cost, and then on that basis, percentage can be applied and recognized. Complicated development agreements between parties with respect to consideration. There are certain agreements, for example, development agreements, joint development agreements, which are having a lot of complications. So we have to read each and every clause of the contract. We have to understand the various milestones and stages of doing this contract. We cannot skip any clause in the agreements. RERA compliances, which requires expertise in related regulations. So RERA compliances are a must to understand. Risks, income tax consideration driven revenue recognition. We all know builders, mainly if you go for audit of an entity, of a real estate entity, they will be very, very particular that my revenue should be this only because my income tax will be paid, have to be paid. If revenue is recognized more, my income tax will be more. But we have to go by the judgments, we have to go by the estimates, we have to go by various certificates. So we have to do our audit part, and builders will always be driven by the income tax consideration. We all know that. Now, some challenges which we face in real estate audits is challenges of presenting fair values in financial report. That is always a challenge. And there can be incentives to inflate or deflate such values for purposes of transactions or raising capital. So we all know that the builders, I should not say the builders only, that is for any business. So they will always try to put up a certain estimated revenue and, argue on that point, because otherwise they will face difficulties in future for raising capital or debt. But as auditor, you have to be always a watchdog, and you have to see that the, fair values have been presented in the financial statements. That's our job. So that is something which is challenges always there with the auditors. some small checklist I have prepared. If I think the WMEC will definitely share my presentation with the participants. So this basic examples is that what is the status we maintain, that what is the status of work completed, whether it is what is the percentage of work completed, which is very important for revenue recognition. Then purchases, we need to check with the bills with quantity. You can all see on your screens, labor bills, payments, bank payments, assets, fixed asset registers have to be seen. Here you have to be a little careful. Sometimes it happens that the certain fixed assets are being purchased, certain assets are being purchased for the as amenities. For example, water filters are installed in each and every flat. So that will not become part of your fixed asset. It will become part of your construction cost. So those things you have to understand. The fixed asset will become what the construction machinery which you are using for the building. So that will be your fixed asset. Now statutory payments, that is, these things are some things are there which are there in all the audits. So I need not cover those specifically, because these are part of almost all the audits, and there is no may not be a very significance in only particularly for real estate entity. Still, I have just made a small checklist for your reference. Thank you so much. And at the end, I would just like to mention that we have prepared certain objective questions for your reference. The participants would be getting those questions in their joining link. The WMEC would have shared the joining link. So those questions are there. So I would request all the people to attempt such questions. And I'm sure the WMEC will share the solutions at the end of the session in your links. So just go through those questions and try to attempt, and then just see if you can answer those questions to your satisfaction. Thank you so much.
Thank you, Meenakshi ma'am. On behalf of WMEC, I extend my heartfelt gratitude to you for taking an insightful session on the topic of issues in audit of real estate entities. The information shared by you during the session was both insightful and thought-provoking. You have skillfully navigated through the complexities of real estate auditing, shedding lights on various issues related to it, referring the guidance note. Your expertise and practical examples provided valuable insights for professionals, and it will be very useful for conducting audit of real estate entities. Once again, thank you, ma'am, for sharing your knowledge and expertise.
Most welcome.
We are concluding our first session.
Thank you so much for this wonderful opportunity.
Thank you. Thank you. Now let's move to our next session. Our next topic is on making compliance easy through Tally, and our next speaker is CS Sonal Jain ma'am. Welcome, Sonal Jain ma'am.
Thank you so much.
I am privileged to share her introduction with you all. Sonal ma'am is a partner in Mistry and Shah LLP, a chartered accountant firm in India. Throughout her academic career, she was a topper and has secured 24th All India rank in CA final examination. She was a gold medalist in Bachelor of Commerce and was university topper in Master of Commerce. Her expertise area of practice are indirect taxation, system implementation, FEMA, customs, and FTP. She is an active speaker on various topics and has taken more than 100 sessions in various professional forums. She has been awarded with Young Achievers Award in CA Women Achievers Award 2018 by ICAI Ahmedabad. She has been chairman of Women Empowerment Committee and of CA Association. Recently, she has been awarded with CA Woman of the Year Award by ICI under Women Excellence Award 2023. Last year awarded her. We are privileged to have you with us in this session. Welcome you, ma'am. On behalf of WMEC, I request you to take the session. Over to you, ma'am.
Thank you so much for warm introduction, and without much wait, I will just start the session.
Okay.
Just ma'am, can you confirm, is the screen visible?
Yeah, visible, ma'am.
Okay, fine. So hello everyone, today's topic is making compliance easy through Tally. So at the beginning of session, Preeti ma'am said that for many SMEs we are using Tally. So today I'll be showing you certain features of Tally. Using them, your compliance can be more simpler. In compliance part, we will be taking about how we can do audit and analysis through Tally, how we can have a audit trail maintained in Tally, how we can have user controls in Tally. So let's start. So friends, in today's session, we will be demonstrating Tally 4.0, that is latest version of Tally. That is Tally Prime 4.0. And we will be covering three topics. One is Tally Audit Trail. As we all know that effective from 1st April 2023, for all companies, it is mandatory to have an audit trail. So we will learn that how through Tally, in the Tally itself, we can have detailed audit trail. Second is we'll be learning how we can have a dashboard facility in Tally, and this dashboard facility can be useful for chartered accountants as well as for our clients. We can teach them that how they can have a real-time updates of their backup. The third thing we'll be covering is audit and analysis through Tally, like how we can do our statutory audit, internal control audit through Tally. So first we are going through audit trail feature of Tally. Is the Tally screen visible to all of you? I hope so.
Yes, visible.
Okay. So friends, I have created one demo data. First of all, we will learn that from where we can enable this Tally audit feature. So friends, as I said in the beginning, that what is the purpose of learning this Tally audit trail feature? So in the presentation itself, you can see that from the 1st April 2023, it is mandatory for each company to have a Tally audit trail. And as a chartered accountant, while certifying the balance sheet, we have to ensure whether Tally audit trail was available in the company and whether it was effective throughout the year. I'll even go through the clause which is to be mentioned in audit report. The best part is Tally Prime 4.0 gives the facility of Tally audit trail at all the three levels, right from the transaction levels to master level and as well as company level. So we will see that how we can have an audit trail for each transactions, how we can have audit trail for masters, ledgers, stocks and groups, and how we can have an audit trail at company level. So friends, as you can see the Tally screen, I will first of all show you that from where we can enable this feature. So this feature is to be enabled at the company creation menu. Please remember this feature is to be enabled at company creation menu. So I am going to the company creation menu. This is the company creation menu. Here simply by clicking the F12, you can see the second option is set edit log applicability. So in this current backup, I have already marked it yes. So whenever you want the edit log facility in your client data, what you can do, you can enable this edit log feature. So once you enable this edit log, we can generate edit log at each level. So I have already enabled this feature at company creation menu simply by clicking F12 and marking second option as yes. Now once I enable this, now see what will happen. Let's first understand how we can have audit trail for any master. So I will simply create one ledger. Say YZ data. I am saving this master. And this master is created. Now suddenly I realized that I have not marked the GSTN in this master. So I will be altering this master. And I will be entering the GSTN number. So I have entered the GSTN number. Now, as you can see that I have done one alteration and one creation for this ledger. See, if I want to see the audit trail for this ledger, I'll simply go to this ledger. I'll click on related reports. I'll click on edit log. Friends, you can see that within a moment, there are two logs for this. One is the creation log and second is the alteration log. So one is at 4:17, we have created this. So we can see that this ledger is created. Now there is alteration log also. So why there is a alteration? So you can see there is a red mark. So what is the red mark? We have added the GSTN. So there is a alteration. So you can see that Tally has kept all the version 1, version 2 of the alteration. Now suppose I even do further more alteration in this, I change the address. So now if I see the alteration report, there are three versions. One is alteration 1 at 4:17, second is at 4:80. So if I click on this, I will be able to see the reason of alteration. You can see there is a alteration in address. And friends, the best part is you can summarize this alteration to only alteration also. See, for example, I'm clicking F12. It gives me an option to enable and disable thing. See, if I click on show only altered things, then other all fields will go away, only altered field will be there. So you can see that only the fields which are changed, those fields are available. You can see that first we did GSTN change. At second level, we have changed the address change. And this is the creation. So at all the level, you can see all the information. And suppose I delete this ledger. Suppose I am deleting this ledger. So now this ledger is not there in my menu. Now if I see my window, you cannot ledgers. This ledger is not available. There is no XYZ data ledger. And as an auditor, I want to know even the deleted ledgers. So this I can find at stats of accounts. I will go to stats of accounts. I will click on ledgers. I will change basis of view and I will include deleted transaction. So friends, at this window of stats of accounts, I am including the deleted ledgers. I am marking the deleted ledgers as yes. Now we can see this XYZ data. This is there as a deleted. And once I click this, you can see that entire log is there. One is creation, then there is alteration, then there is alteration, and there is deletion. I can see that yes, I have created this ledger. Later on, there is an alteration of GSTN, there is an alteration of address, and then it was deleted. So friends, don't you feel this is so interesting? We can have a log of each ledger at each level. And this is not just for ledger. This is for even stock item, even for cost center. This is for any masters which you create in Tally. Those who have any question, they can mark in chat box. So I can even answer them parallelly. So friends, we have solved the masters and edit log for all the ledgers. Now let's have the edit log for the transactions. So suppose I'm putting one sales transaction. And I'm simply saving it. I am not marking the GSTN detail. So this transaction got saved. This is the transaction. Now suddenly I realize that I have not marked the GSTN. So I will add the GSTN in this. So I have marked the CGST, SGST. And I'm saving this. Now, later on, I just want to see the trail of this transaction. So what I will do, I will simply click on this transaction. I will click on the related report. I will click on the edit log. The edit log feature is available even if we simply click alter Q. So I'm clicking on this edit log and you can see there are two trails in this. One is there is a creation trail and there is alteration trail. So let's see what is the alteration trail. you can see that in the creation version, there was only single amount of 5 lakh. And in the alteration version, there are CGST and SGST. Now, suppose I do further alteration in this. I make the quantities to 15 quantities, and accordingly GST also change. So now let's see the edit log of this. So you can see there are 3 line item. One is the creation, second is alteration of GST, third is the alteration in the units. You can see that earlier it was 10 units, now it is 15 units. Now suppose friends, I do alteration in the masters for this ledger. Then even the master alteration will impact the transaction. For example, I change the information of Alpha Limited. So currently at this transaction, there are 3 line items in the edit log. Now I am doing alteration in the master. I am changing the address. And I am even changing the GST. Now, though I have not changed the transaction, I have simply changed the masters, it will impact over here. So for this transaction, we are going through the audit trail. So you can see there are 4 changes. So friends, now for deleted transaction, if you want to see the transactions, suppose I delete these transactions. I am deleting a particular transaction. Say I am deleting this purchase transaction. Now, as an auditor, I want to see the trail for deleted transaction. So what simply I need to do at the day book. This is my day book. In the day book, I just want to click on the basis of the values, and I have to include the deleted transaction. So I've included the deleted transaction. So currently you can see there are 2 deleted transactions. So now I just need to simply click on this. Once I click on this, I will come to know that yes, this transaction was created on so and so date by so and so user at so and so time. And it was deleted also by so and so user and so time. Same way for this. This was created by accountant, altered by Sonal, resaved and deleted. This is how we can have the entire log for user wise for each transaction. Now there can be a question that from where to create a user. Generally we do accounting in Tally as a single person. But friends, we can do user wise accounting also. That we can do simply by going on the company menu. And there is one option called user management. So here we can simply define the user. So for this company, I have defined 4 users. So here you have to define the role of the user, name of the user and password. This password you can give to different user in your company, and accordingly they can do accounting through their logins. By this user management, what will happen? You can have the Tally log user wise, and you can define the owners. Like if someone has posted the entry and it is deleted by someone else, you can definitely tell that this transaction was done by Mr. A, deleted by Mr. B. Many times we have seen in the company that what happened at the time of finalization, the person says that I don't know how entries got deleted. It was deleted by someone else. I was not doing this. But by this edit log system, we can define the owners. Like this edit log will save everything in the Tally itself. So that person cannot deny what is system is telling. Then after system will record everything that yes, this transaction was done by Mr. B, it was deleted by Mr. C, it was altered by Mr. B. So I would suggest that for your mid-sized companies where it is, if they are companies and it is mandatory to have a edit log, you can enable this. And for entities other than company where you want to define the controls, many times for internal control purpose also we want to have this edit log system. Then we can implement this edit log irrespective of fact that whether it is statutory applicable or not. So from the compliance angle, as company law itself says that for each of the company it is mandatory to have edit log. Yes, we can suggest to our client, but even for for other than companies law requirement, for a better control and for a better work management, we can implement tally audit trail feature for our clients. Now let's move to presentation. So friends, we saw that yes, edit log is applicable for the companies effective from 1st April, and we can have edit log in tally. And we also learned that we can have edit log at each level. This is the window of edit log, that this is how we can see the activity, the username, the date and timing. And we even saw that we can have the edit log for deleted transactions. Now there can be a question that many of them what happens, there are two versions of tally available. One is specifically which is tally edit log, and the another one is normal tally. So if you see my screen, on my desktop, you can see that there are two versions of tally. One is tally edit log and another is normal tally. What is the difference between these two? What is the difference? Why to have tally edit log version and why to have the normal version? So when you want your companies to have, those who are required mandatory to have edit log, we can suggest them to have tally edit log version. The reason why, see, as per Companies Act, what the government is telling, the Companies Act is mandating the company to have edit log effective throughout the year. So if we use this normal tally, what happened? Many times there are chances that accountant may disable the feature of edit log at the company level, and he can do certain changes in the data, and then he can again enable the feature. So what happens? There can be chances of some trails get missed up. But when you have this tally edit log version, there is no feature of enabling the edit log. So it is mandatorily, tally will save everything, each and everything. And no, neither the accountant, neither the owner, neither the chartered accountant, no one can disable the edit log feature in the version of tally edit log. So friends, I would suggest that when it is effective, it is mandatory for a company to have the tally edit log. It is advisable to suggest them to have this version of tally, that is tally prime edit log version. Under this update of tally, there is no option to disable edit log. Like edit log will mandatory be enabled. So if we see the comparison of both, on the screen you can see the comparison of tally edit log version tally prime. So under this, we can see that feature and capabilities of both the version are same. But under the edit log, it is by default edit log is enabled. There is no feature to disable this. And under the normal version, yes, you can disable the feature. When it is useful, when it is mandatorily under Companies Act or under MCA to have edit log, it is advisable to take this version of tally, that is tally prime edit log. And when it is for this internal control purpose for the company's usage or for the entity's usage, you can suggest for normal tally, that is tally prime. So friends, what is the importance of this? So as we all know that in the current year, we'll be signing various statutory balance sheet, and this clause will be there in the balance sheet, whether the company in respect of financial year commencing on or after the 1st April 2023 has used such accounting software for maintaining its books of accounts, which has a feature of recording audit trail. So friends, practically under Companies Act, there would be an addition of new paragraph in the audit report which says that as an auditor we need to certify that company is having such accounting software which maintains the day-to-day changes, which maintains the recording of entire audit trail, and same has been operated throughout the year for all the transaction recorded in the software. So as an auditor, there is a very big onus on us. We even have to certify whether that edit log feature is operating throughout the year and whether it is effective for all the transaction recorded in the software. And the audit trail feature has not been tampered with, and the audit trail has been preserved by the company as a statutory requirement for the record of retention. So friends, there is a very big onus. It even includes that edit log should not be tempered. That edit log has been preserved by the company as a statutory requirement. If you see this as a chartered accountant, we need to ensure that yes, our clients are having the proper edit log. This edit log has not been tempered and it is effective throughout the year. So for this only, I'm suggesting you to have Tally edit log version which don't have any facility to disable the edit log. So by default, there would be saving of each changes of transaction as well as master. So we all learned that from where to enable this edit log. So it is enabling is to be done at the company creation menu. And we even saw the edit log for a particular transaction. Like we saw that how a transaction gets saved, how it get altered, how we can have the log user-wise. And this is there in the latest version of Tally. For this, you have to have Tally 4.0. So friends, now moving to the second part, that is dashboard feature of Tally. So friends, I hope the Tally screen is available to all of you. And we are moving to second option. Any doubts on the Tally audit trail part, you can mark the question in the chats. So we are moving to the second feature, that is Tally dashboard. So friends, believe me, after seeing this feature, you all would be surprised that yes, Tally also have facility of dashboard, which is there in the business intelligence software. Generally, we see various BIs available in the market, which gives the data analysis and statistics for decision making purpose. So friends, this facility is now even available in Tally, and that is at the very own the gateway of the Tally. So for this company, if I click on the dashboard, so you can see that this is very different report. Many of you might have seen for the first time that yes, this graphical report we can see in Tally, and you can see that by just simply clicking on dashboard, I can see entire information of the company. I can see the sales trend, I can see the purchase trend, I can see cash inflow, outflow, trading details, asset detail, receivable detail, accounting ratios, top groups, cash, bank. For any lay person, many a time the owners doesn't know Tally, but they want to see the various information of the data. So they can simply click on the dashboard and they can have the understanding of the company. So friends, the most interesting part that Tally gives the facility of almost 45 tiles. This is a one tile that is sales trend, the another tile is purchase trend. So as a auditor, we can even configure the tile. We can add as much as tile possible. Suppose I want to add new tile. So these are by default 45 types of reports which are available in the company. So as a chartered accountant, I wanted to know the GST liability, GST reckon pending, GST actions at the very tip point. So I can simply add those reports. Top stock group, stock item, company-wise profitability, accounting ratios, assets and liabilities. As much as possible tiles we can add. And the again interesting part is you can configure the tile. For example, I want to configure this tile. I can go inside this tile also. Expand tile. So you can see I can expand this tile. I want to configure this tile. I want the periodicity on daily basis. And that too, say I want a periodicity on 4-week or month basis, and that too data as well as graph. And I want a bar graph. So you can see the entire data got into 4 weeks. There is a bar graph instead of a line graph, and entire data is available. Now I want to even configure in a more different manner. I want fortnightly data. I want a graph only. I want a line graph. So you can see the information got changed. Same way for sales, I want to change the statistic. I want to configure this style. I want to add quarterly. I want to add data as well as graph. I want to have bar. I want to have position of this tile at 11th, not at first. Now you can see that tile has moved at last, at the end, and you can see my quarterly sales. So as a company or as a owner, as a chartered accountant, I wanted to see the performance of company. I can simply go at the dashboard and see the entire thing rather than going into entire transaction level. And the best part is you can drill down this this tile to transaction level. Now I want to see the transaction. So through the tile itself, I can go to transaction. By simply entering into the tile, I can go to transaction. See, for each quarter, I can go to transaction. Even through graph, like I can even, graph are also movable. See, I'm just moving the cursor to graph. I want to see January 24, March 24 sales. I'm simply clicking on this and I can see the sales. Okay, don't you think this is quite interesting? And having all set of tiles, like this tiles, you can add to n number of tiles and you can save this view. So I'm saving this view as owner's dashboard. Now what will happen very next morning as a company or as a CFO of the company or as a chartered accountant, I want to see the performance of the company. I can simply go to menu and you can see the first dashboard is saved, that is owner's dashboard. By simply clicking on this, you can see the entire report. The report which we have configured 5 minutes before, that report is available. Expand the tile, you can see the tile in an expanded format. So friends, through this, I hope this feature would be very useful to all of you. That is Tally Business Intelligence, that is having owner's dashboard in Tally. And you can save the view of this business dashboard. Now let's move to one more feature of Tally. Any question in meanwhile on this?
Still there are no questions. You can continue. I will take it together
Okay,
at the
fine.
end.
Okay. So now friends, now let's move to the third part of the session. We have covered two things till now. One is Tally edit log. The second thing we have taken is the dashboard feature of Tally. Now third thing that is very useful for a chartered accountant, that is how we can have the audit and analysis through Tally. Now the first question will come that how we can do the auditing through Tally. So friends, Tally is one of the very effective tool for doing audit. Your statutory compliance become very much simpler through Tally. So how you can do that compliance easier? So simply go to the company menu. I'm just going to company menu. Now simply click on company creation menu, that is order. Now at this company creation menu, there is a very last second option, that is enabling the Tally edit or audit feature. So once you enable this Tally audit feature, you mark it yes, all the features of Tally audit becomes enabled. So friends, we learned to enable today. One is enabling the Tally edit log. That feature we enabled at company creation menu. Second is enabling the Tally audit feature. So from where we can enable this Tally audit feature? So that is at company creation menu. So I'm enabling this Tally audit log feature. Now once you enable this Tally edit log feature, at display more report, there will be a menu called analysis and verification. So through this window of analysis and verification, you can do entire audit of the company through the Tally itself. Now, how you can do entire audit of the company through Tally itself? So I'm simply clicking on this analysis and verification. And there are two options, that is that data analysis and voucher verification. So whenever we do audit, we all know that there are two processes. One is compliance and another is substantive process. Under compliance process, we see the masters, we see the fixed documents of the company, we see the trial balance, we see the transaction, all the ledger creations and everything. Under compliance process, we see the entire in-depth transaction, like we see day-to-day transaction. So in Tally also, they give you two facilities. One is to have the compliance process, another is have substantive process. So under compliance process, under data analysis, they give you this many reports. So as we all know, we generally used to learn this thing during our study type, that to have the trial balance audit, to have the audit of trial, taking the previous trial and current year trial and having the comparison of same. So rather than doing this comparison manually, we can do that comparison in the Tally itself. So how you can do? So you can simply click on verification of starts of account. So you can see that under verification of starts of account, there are 5 types of classification of ledger. One is accounts squared off during the year. So as an auditor, my concern would be why this transaction, why this accounts are squared off during the year. I can simply extract this ledger name and I can simply tell to the client that give me the details why this has been squared off. And the best part is I can simply mention all the details in this trial balance cell. So for this ledger, I wanted to keep this on hold and I wanted to have a supporting evidence of ledger squaring off. So I can simply mark my comments in Tally itself and it gets saved permanently. Generally, we do audit manually, mentioning the comments in the Excel. The Excel got misplaced. Even the article will say that I have mentioned the queries in my diary. The diary got misplaced. Rather than doing the audit through this Excel or through this manual diaries, we can save the entire information in the Tally backup itself. So by mentioning my query in this, and what I wanted, I wanted external confirmation in this. I'm simply marking this query. Now for this RV stores, it is verified, no queries. So I can simply mark yes, it is verified and it is done. So for these two ledgers, my audit has been done. Same way, there are certain ledgers which are not used during the year. So as an auditor, my question, there can be a question that why these ledgers are not used. Are there multiple ledgers with same name? Like see, there is a transports and there is a transportation. So these are multiple ledgers. So I can mark a query that on hold is it multiple ledger. Same way, there can be a ledgers only balances and no transaction. So here I want a balance confirmation. So for land and building, I want a property document for validating the value. For this Maruti van, I wanted to know whether depreciation is provided or not. For this salary advance, I wanted to know why this has been not squared off during the year. So friends, you can see that my entire audit documentation is getting done in Tally itself. And as a auditor, I can simply export this and save this as a permanent file of auditing. As a standard on auditing also, it suggests that we should have documentation of entire auditing done. So this facility in Tally gives the easiest thing for us to have a documentation for each transaction as well as for each line item in the trial balance. And it makes our work simpler. Same way for use during the year, you can mark the comment. So this was for verification of status of accounts. You can do even verification of for stock items. So there are 32 stocks which are going negative. So being an auditor, I can have a question that I wanted to know why stock is going negative. There can be chances that purchases are not been parked or sales has been wrongly recorded. So these are stocks which are still lying through opening. So as an auditor, I wanted to know whether this stock still exists or not. It's been 1 year. There is a no movement in this stock. So I wanted to know whether stock actually exists or not, or there has to be any written off or not. does this stock physically exist or not? So this is how I can save all the queries and simply export it and give to management for solving these queries. Same way for verification of balances, I can do like we can simply take the trial balance of last year audited backup and simply compare with this. Tally even provides a facility of analytical comparison. Like we can compare ledger with ledger, group with group, category with category. So I want to compare, say, I want to compare the sundry expenses with sales. So you can see that there is a comparison during the year. This much was the sundry expense, this much was the sales, and this is a percentage variance. So on your company's actual data, you can put comparison on various factors, like you can compare purchase with sales, you can compare advertisement expense with sales, and you can compare with any sort of comparison which you wanted. So under analytical procedure, there are various number of comparison which are already there. And as an auditor, through this comparison, we can even analyze the trend of the company. This is how we can even see the repeated transactions. There are chances that certain transactions are on monthly basis. So through this, we can find that yes, this transaction is regularly there, and whether it is not been posted for extra time. Like there can be a every month expense of say 50,000 of rent. So as the auditor, we need to ensure that they are of 12 count and not 13 count. So this expense of say rent, it is there every month and they are 12 count. So as a chartered accountant, yes, I have ensured that yes, rent is booked correctly through this window. Same way, there are fixed analysis, fixed asset register, we can see through this. Now, this was all data analysis. This was all statutory part. Now let's move to how we can have a transaction audit. How we can have the substantive procedures to tally. So that is through voucher verification window. So now we are coming to voucher verification window. Now let me again recall to the how we have gone through this window. So we have enabled this at the company creation menu. Under company creation menu, we have enabled the tally audit trail feature. Now we are moving to display more report. Under display more report, there is an option called analysis and verification. Under this, there are two options, that is that data analysis and voucher verification. Under data analysis, all compliance part is there, like charts of accounts, trial balance. Now, under substantive procedure, there is all audit of transaction. Now, if you see the substantive procedure, this is simply doing the manual audit in Tally. The audit which we do through green tick, that we have to do in Tally itself, rather than doing it through pen and paper. So what happens? Tally gives me a facility that yes, in entire year, company is having all 642 transactions. So there are 642 transactions in the company. The first thing, being an auditor, what I need to do, I need to sample this data. So generally, how we do sampling, our senior used to tell that pick 2-3 months or pick 4-5 transactions of each month, or we simply sample based on our choice. But what institute says, or what the standard on auditing says, that yes, there has to be some basis of sampling. We cannot do sampling on a haphazard basis, and the method of sampling need to be documented as a part of auditing. So now Tally gives you a beautiful facility of saving the samples and defining the sample method. So now I'm going to this and I will define the method of sampling for each of the transactions. So for say for sales, I'm choosing the sampling method. Sampling configuration. You can see there is a window at the side that is sampling configuration. So I'm simply clicking on sampling configuration, and Tally is giving me this many method of sampling, almost 7 method of sampling. One is clicking all vouchers. Second is amount range. Third is Benford analysis. Even number, odd number, specific period, specific voucher. Now, Benford analysis is a based on trend. It is a method defined by the relativity. Now, if I'm clicking on positivity, so you can see that by this method, 26 transaction got selected. Now I can even see the benefit detail. So it has taken the relative size factor and selected the transaction from this. Now I can even change the sampling method. Now if I want to change the method, I want to move the method to even number vouchers starting from say 2. So you can see 53 vouchers got selected. So this is how I can select the sample voucher from the triple one vouchers. 53 vouchers got selected. Same way for receipt, I want to do sampling. I wanted to do sampling through odd number vouchers. Same way for payments, I want to do sampling through benefits. So there are 3 transactions. Same way for journal. I want to select through amount, the maximum amount is. So 25 transactions got selected. So this is how my data sampling got saved. Now I can simply do auditing of this sample transaction. Now suppose I want to do auditing for this 53 transaction. I can simply move the cursor and move to this 53 transaction. So you can see that this transaction are there. Now what I can do for this 2,51 transaction, I am asking client that you show me the voucher, sales voucher of this, you show me the agreement. I'll select, see all the details that yes, everything is correct, pieces are correct, value is correct, GST is correctly calculated. I will see on the related report that whether GST is correctly calculated. Yes, it is correctly calculated. HSN is correctly marked. Product details are correctly marked. So once I'm satisfied with this transaction, I can simply mark, yes, it is verified. Suppose for particular transaction, I feel that there is a wrong calculation of GST. Then I will put it on hold. I will simply mark wrong calculation of GST. Need to check in GSTR1. So this is on hold, and as a auditor, I can get this query solved at the end of the audit with the company. Same way for this transaction, I wanted a external clarification whether HSN is correctly marked or not. So this is how we can save the queries for each of the. This was for sales. Now we can even do for any voucher. Now for receipt, I wanted to do audit. So this is audited. I can simply mark it yes, verified. Verified. And you can even do manual sampling. Like if you want to do sampling manually, you can do manual sampling also. And best part is it even define the sales order and other transaction. So as an auditor, we don't miss any set of transaction. Like even we see 2-3 credit note, 2-3 debit note. Generally, what happens whenever we go for audit, we simply tell to our team that check sales purchase. There are chances that he may forget purchase, he may forget payments, he may forget journals, he may forget memorandum entry. But when you do audit in Tally itself, you have at least glance of each of the transaction. Like you have a glance of all set of transaction of the company. You can even check the memorandum entry that why these entries are passed. Like this company has passed through memorandum entry. So we wanted to know that why this is passed, what is the reason for passing this memorandum entry, and I've marked them as bold. Now, friends, let's move to main window. I hope that screen is visible to all of you.
Uh, Sonal ma'am,
Hmm?
we cannot listen you. What you told?
No, I just was moving to the main window of Tally. I hope Tally screen is visible to all of you.
Not yet. Yeah, now it is.
Just a moment. Okay, fine. So we have seen the verification, voucher verification window, and we understood that how we can do sampling. So for this company, for 642 transaction, we did a sampling of almost 20% transaction. And from this, we have verified only 2 transactions. These are our verified transaction, and other we have marked the queries. So friends, this is how we can do sampling for each, and we can save this report. We can simply export this and save it permanently in the client folder stating that, yes, this was the audit sampling we have done for the company and these are the methods we have opted. Best part is each method is a proven method. The benefit analysis is also proven method. Even number, odd number, month wise, amount range. We can define each method and we can select based on the gravity of the transaction. Like for sales, if you wanted to do limited, we can define that sampling where there are limited sample for a particular transaction. For journals, if you want a high number of transactions to be sampled, you can select the method accordingly. Friends, now one more thing I wanted to teach you. Under sampling, we saw how to do transaction-wise sampling. Now, once our audit get completed, we can save this audit. So that can be done through verification menu. And I'm simply saving this verification complete. Once you do this, all things will get saved permanently. Now, one more thing I wanted to teach you, that is how we can have MSME configuration in Tally. As we all know that recently there is an update to have all MSME details in the company, and there is a company law requirement to upload a MSME form also. So how we can do that? That we can do by simply at ledger creation menu, say for this alpha provision. This is the data and I wanted to mark the MSME detail. So you can see under more report, there is a menu called, again I'm showing where I'm going. I'm going to company creation menu, master creation of that ledger. Under master creation window, there is a menu called more detail. Under this, there is a option called MSME registration. So I'm marking it yes, I'm marking it say micro, and I'm marking the Udyog number. Same way for this, this is also data and I want to mark say MSME detail. This is how I can update the master for each of the company and I can update the MSME detail of the company. Now what Tally will do under display more report and under statutory report where we see GST report, there is one more option called MSME report. Many of you might have not seen this. Under MSME report, you can see there is a form called Form 1 statement. And there is a update party MSME. So for all the ledgers, we can update together. You can simply collect MSME number from each of the party and update it together. Now what Tally will do, Tally will fetch this information permanently and this information saved will help us while filing the Form 1 of MSME. So friends, this was all about today's session. We got through the dashboard of Tally. We even learned how we can have the this dashboard configured for our clients and for a company. Now, any questions?
One question is there relating to edit lock and how edit lock and normal Tally Prime, how we can go through about it, how we can, matlab, it is relating, how we can go through relating to it. What is the difference, main difference between both? Can you
See,
have a
there are two things. One is if your like client is a company, under company law, it is mandatory to have edit log, irrespective of fact that it is not tempered. Say if it is company and where there is lawful requirement of edit log, I would suggest to go with the Tally edit log version, where there is no facility of disabling the edit log. Otherwise, you can go in normal Tally where you can simply enable the option. See what happens if there is an option of disabling, there are chances that company accountant will disable and make the changes and again enable. But under edit log version, there is no option of disabling. So what will happen? Uh, the security and reliability will increase, and as an auditor, while certifying, we can be like sure that yes, this company has good audit trail.
okay. And as you shown that in dashboard we can add we can have different tiles. So tiles can be increase or decrease.
Yes, we can have maximum 11 tile in one window, but you can have thousands of tile. Like you can save those 11 tiles and you can give the nomenclature. Like in the one tile, we gave the nomenclature owner's view and we saved 11 tiles. Now I want certain different types of tiles. Now I will make a new report with other 11 tiles. But you can make hundreds of tiles based on your company's requirement. Like a purchase department wants all dashboard related to purchase information. The stock department wants all moving item for maintaining the economic quantity. Then he will have dashboard of all quantities. The finance person want dashboard for cash and bank. Then he can have own dashboard. So this is like आपको कौन से ऐप आपके विंडो में चाहिए. Like we generally make that fast use app we put at front. This is same customizable at your choice.
Yeah. So, yeah, very nicely explained. Thank you, Sonal Jain. Ji, ma'am, it was very nicely explained by you, very detailed with practical example. It helps us to go more detail that how we can operate relating to it. So it was very nice session, nice view of everything, every detail and minute detail you explained. And it was very grateful on your side to explain it so beautifully, the concept and Audi Tally Prime, which is a new concept but very clearly explained by you. So it will be very helpful to our members who will be enjoying this by seeing your video and going through it very detailedly so that they can get more clarity how they can go about it. So thank you, Sonal ma'am.
Thank you, my pleasure, and I hope I justified the topic given to me. Thank you, all the
Yeah,
listeners.
yeah,
Thank
yeah,
you.
yeah, yeah. It is indeed pleasure. Thank you.
Okay, thank you.
So thanks everyone.
Sure, ma'am.